Hey, hello, welcome friends. This is Raj from West Data. Today we are going to see the market structure analysis for the week starting May 29th. So I remember we posted a message on April 3rd that the markets are getting bullish based on some conditions. What are those conditions? I just want to quickly review those conditions which we repeatedly talk about in every chat. So these are the conditions for reversal and for any kind of reversal, upward or downward, right? So if the market is going to get into a bearish mode, then all these three conditions has to met. Very simple conditions. All our L1, L2 and L3 should go red, right? The L1, L2, L3 are the West Data key levels based on the price action and the speed of the market. And then the next condition is close below the previous month's low, right? And the final condition is form a resistance at the red candles with the red candles, right? So form a resistance below that previous month's low with the red candles. Okay, so this is the very simplest condition which we can apply at any stages in the market to confirm whether the market is getting into a bearish mode. We have to be a little bit careful. Okay, same way bullish. For bullish mode, first thing is all our key levels L1, L2, L3 get into green, which is there, and then close above the previous month's high. So previous month's high should be broken, and that should become a support rather than a resistance and form a support with a green candle. Okay, so on this three conditions is what we have to look for. And on April 3rd, what happened was this condition happened, right? So all three levels were green, okay, and green candles appeared, but I said we have to wait for this condition to confirm that market is turned green. Okay, so the two conditions met on April 3rd, but it did not form a support and it did not break above the previous level, previous month high, and that's what we were waiting for, right? And which happens eventually, as you see here. So this is a message we posted on our WhatsApp group on April 3rd. So on this level, we our expectation was this is at a previous month high and this month high, both are same. So we said, okay, it turned green on April 3rd, but it has to break this congestion. So this is a form of support at this consolidation at this level. It has to break this level, which is the previous month high, and then form a support, right? So it has to break this and then form a support at this level in order to push up, right? And that's what we said. In order to confirm its uptrend, it has to break above this level and form a support. So that's what we were expecting, and it happened. Okay, so when it happened, so as you see here, so up to May 10th, up to May 10th, nothing happened. On May 10th, it broke the previous month high, which is the white dotted line here, as you just see this one, which is the dotted line, white dotted line here. It broke above that on May 11th or May 10th, right? May 10th, it was a very good break above the previous month high, and then after that it never came back. It never closed below the previous month high, as you see clearly here. This level got never broken out or closed below this level for consecutive 1, 2, 3, 4 days. Okay, so 4 days it never closed below that, which means it's forming a support. It is respecting that support. Okay, so this is kind of all leading indications for us. Okay, it's forming a support. We don't need to take a speculative call here because anything could happen in the market. We can't predict it, but this is clearly saying, oh, okay, I'm taking this support, I'm respecting this support. So then it's our time for an entry at this level, probably at this level, into a market. And then you can see what happened, right? So it just pushed up high and then pulled back a little bit and then pushed up so much high. Okay, the one good thing we need to note down with when we look at the markets, we don't want to look at one thing. This is the NASDAQ. So we need to look at everything, NASDAQ, S&P and Dow Jones, right? So Dow Jones is always sometimes behind Nasdaq and S&P. So at least two markets have to conform in the same direction. That means it's a good bulls are in the market, right? Bulls are in the market in a big size. That's what it means, right? So so this is Nasdaq. So we'll see what happens on S&P 500, right? So S&P 500 same pattern. So around March, okay. So Nasdaq got into that green mode, that bullish confirmed mode, which is these three conditions met on the April, right? And here you see March 29th itself, it turned green, but still not all our conditions met, right? So the third conditions is not met because it has to close below, close above the previous month's high, and which happened here. But again, as you see here, it is not so strong. Okay, clearly it is not so strong because it broke above the previous month high and then came back, broke above, came back. It is, there is no strength. This is telling us there is no clear strength, but it's still, bulls are trying hard, but there is no strength. Okay, same thing happening after April, May also, right? May also, it is green, but as you see clearly here, it is not able to break the previous month high. One, two, two closes, just two closes on this date, but it was not able to maintain that, came back, and then again breaking it. So it's clearly saying, yes, there are some bulls. See, at the end of the day, the game is all about bulls and bears, who wins the race, right? So how much bulls are in the market, right? So yeah, here it says clearly, yeah, bulls are in the market, but not so strong enough to push it high, though we see some bulls are trying, not everybody has joined the rally, but some bulls are trying, right? That's what it is showing, okay? So does it mean a big risk? No. It's better than bearish position or no direction, right? So no direction means like, I don't know where to go, so I'm just chopping here, here, here. All these grays are chops, right? So chopping, chopping, no direction, no direction, no direction. So that is what it means, right? So right now, so one more thing is, like, if I just zoom it out, you see here, after the big move down from I think November 2021, after the big move down, S&P has tried to become bullish multiple times and failed. Okay, here one time at August 2022, and then here one more time, December 2022, and then Feb 2023, and then now it is the fourth time. Okay, so four times it tried to reverse the market. But remember, as I said, it is not just S&P, right? Every other markets have to align and confirm that pattern, right? If I go to Nasdaq, I don't see any of that pattern happens here, right? So as you see here in Nasdaq, after this November 2021, I don't see any green candles throughout the way. Yeah, there are sometimes it tried to push up, but absolutely there is no buying strength there, but still market got pushed up, but absolutely I don't see any buying strength there, no green candles all the way from anywhere, right? But the first time the green candle started showing up on April 3rd, which is the first good sign, and at the same time S&P also already into the green market. Okay, the third market which we look at is the Dow Jones. Dow Jones is, as I said, it's always, sometimes, most of the times it's weak. It turned green, but it is absolutely no strength for picking it up. Okay, so it's coming down, so I don't see anything happening. So as of now, but if three markets align together, it is a great sign, right? If two markets align together, yes, that's a better sign than other stuffs. But if three markets align together, it is a great bullish market, right? So yeah, so as of now, so the S&P and Nasdaq are showing strength. S&P is right now showing less strength. Nasdaq is overextended. It got spiked out a big way, right? So what will happen next week, right? So that's what we wanted to understand. Yes, is market getting into a bullish mode? Yes, absolutely yes. Market turned bullish. Okay, so any pullback is a buying opportunity, right? Any pullback into our level one is a buying opportunity. Sometimes the level one could break, and then level two, up to level two, it can come pullback. Okay, but any pullbacks to this towards this level one is a buying opportunity for long term. But right now what is happening is the market is extremely stretched, right? So as of last week, the market is extremely stretched based on one little thing, which is the debt ceiling decision making, right? And I think the decision is pending in 3 to 4 days from now. So if that decision didn't go well, this pullback is going to happen very soon. Okay, so the next week the expectation is there is going to be a pullback. That is what I'm kind of expecting. Market can go little bit higher, and then I'm expecting a pullback of the market up to our level one or up to this level. Okay, so this level, which is the higher lows, right? So this is the higher low. So the market is expected to pull back to this level easily, because the debt ceiling decision will be a big trigger for the markets to pull back. Okay, because it's overstretched right now as we speak. Okay, again, it's all based on what we see, because the only Nasdaq is pushing up. The S&P is absolutely no strength, but still it is bullish. Okay, still it is bullish, but absolutely no strength. Dow Jones, no clue at all. Okay, it's still trying hard. No bulls here, strong bulls here. So based on this, what I'm thinking is, if the debt ceiling decision not goes well, all market needs is a trigger. Okay, it could be anything. It could be anything. I'm talking about debt ceiling, but there could be many other factors and fundamental factors in the market. But technically, it needs a pullback. So that can be triggered by any fundamental triggers, right? Which is one of the thing which I talked about, the debt ceiling, right? So that's what is expected here, guys. So as again, so the markets are bullish. Okay, so for the first time, two markets aligned in the same direction, Nasdaq and S&P. So I expect a little bit of pullback. If debt ceiling goes well, still there needs to be a pullback. Okay, market is overstretched here. So how I'm saying market is overstretched, right? So as you see here, the distance between this L1 and this current close price, okay, in last 2 days it got spiked up crazily, right? So it's like 14,300, close to 14,300. This is 13,800. 14,300 to 13,800 is about 500 points. Okay, see, always what is a stable market? A stable market means the price close close to this L1 level, plus or minus 200, 300 points, close to this L1 level. That's a stable market. Okay, the stable market always go closer to the L1s, keeping the L1 closer to it, and just move along with it. Okay, so that is how a stronger market will look like. But whenever we see a kind of aggressive gap between our L1 and the current market position above 500 points, that's a due time for pullback. Okay, so that is always happens in many times. We have seen it. I have seen it personally using these indicators. So whenever the gap between the L1 and the current close is more than 500 points, always markets get corrected. Okay, not when I say corrected, it's not a big way. It's like a small little bit pullback. Okay, so pull back closer, get closer to the L1s, and then go up, right? So same thing happened here, as you see here. So the market went here and then pulled back to the L1s and then just pushed up here. Same thing is expected here. At least 50% retracement, at least to this level or this level, it has to pull back. Okay, so this level or this level, right? Three levels, this zone. The market has to come to this zone before it takes the next step. That is the whole point here, right? So right now, as we speak, the markets are extremely extended. Okay, so that's what for the market structure analysis. So first sign of bullishness in all two markets. Third market will join. Dow Jones will join soon. It's, as you see here, it's taking a support at this L2 level. That's most of the time it happens, right? So if it could not get a support at L1, then it tries to take a support at L2 and then go again, get bullish, right? And that is what is trying to do here. So if other markets go well and all that fundamental things go well, I think there is a good bullish trend continuation expectation is here, right? So what should we do with this markets in place? What should we do? Two things, as we always say. We can go for slowly accumulating our position. So if you remember our 8-point, 4-point reversal patterns, so this is what we always talked about, right? So when the market gets below that, all we need to know is what are all the key levels. We always know all these key levels. I have been posting all the key levels. So right now the market is at 0.7, as you see clearly here. All this 1, 2, 3, 4, 5, 6, 7. Market is at 7, or I would say 8. It almost reached 0.8. That means it should never come back below this 7, right? That is the expectation here. But can it pull back? Absolutely yes. But it should not break the factorial of 7 factorial, right? So it should not break that. It should just pull back and then go up, right? That's the expectation of a bullish market, as always, right? So what we are doing always, so at every level we invest 3% of our capital as an entry for long term and look for possible hedges. If possible, hedge the market as we go along, right? So what do we mean by hedge, right? So right now, as of last Friday, since I expect the market is going to pull back, so as you see here, my expectation is market is due for a pullback because it's overstretched. Okay, it can go a little bit higher, up to 14,600, but it is due for a big pullback. So what I did was I bought some some put options on SPY. Okay, so SPY, I bought some put options at $17. Okay, so I think I have the order details here, so I'll show you. I bought some put options at $17 at a strike price of yeah. So this one, $18. June 12th put, 950, 12,950 put at $18. Okay, so NASDAQ, I bought it at NASDAQ. Sorry, so I bought this at NASDAQ. Okay, so this is our hedge, right? So if I want to tell you, this is our hedge position which I took, and expecting the markets to pull back fast. Okay, not slowly, fast, right? So if that happens, volatility increase, this put will go higher way faster, right? So I bought it for $18. I'm expecting to give it around $25 or $30, $27, something like that. So that is the trade idea there. Okay, again, it is not it is a simple hedge position, but I'm using this to just trade as a trade, normal trade, right? I'm just buying this, expecting the market to pull back, and then I will sell it when I get enough profit. I'll sell it when it pull back. When it does not pull back, so the pullback is inevitable, right? So I'm expecting it because there is too much of stretch. Okay, so it has to pull back. If it does not pull back for a couple of days after the debt ceiling decision, then I will sell it for a loss or at a break even, right? How much is my stop? I would say I'm expecting to lose $800 on this trade. Okay, so if it goes below $10, I would close this position, right? Very simple, right? This trade is an $800 plus or $1,600, sorry, $800 loss for a $1,600 profit. Okay, so 1:2 trade. So I want this to go up, um, up to like 16 $16 go up by $16, but if it go down by $8, I will close this trade. Okay, so that is a quick trade tip there. So how we can use hedging to whenever we are expecting a market to pull back. Okay, so we I do this most of the time when the L1 is too far away from the current close, above 500 levels, which is a quick trade which I take. I don't do anything in my portfolio, but I do that trade which will give me a quick profit in like couple of weeks, right? So that's the idea there. Okay. Okay, cool. I think we are good to go. So happy trading, guys. See you next week in the market structure trading. And one more quick update I want to give is I'm planning to start a live streaming session of my day trading futures. Okay, I'm planning for a futures trading, intraday trading, small course on fundamentals of future intraday trading, how to trade, what things we need to know, what are all the instruments we can trade, how much investment we need, all that. So I'm posting a video on how to do intraday trading on futures, and I'm also planning to host a live daily live session on YouTube while I'm trading during the mornings. Okay, so it's not a mandatory session. If you want, you can join. Otherwise, it's absolutely fine. But I'm starting, right. I'm starting as uh, one of the knowledge sharing session to the teams. I'm starting that. The live sessions will be always on the Visdata YouTube channel. You can always go ahead and watch. So I'm trying to set up my infrastructure ready for making it live. Once it is there, we will start trading. Okay, so primarily I'm looking at trading some of the key futures, future contracts. Okay, so which I will post a video this week, so you can go through it and watch that completely. And then once I start the live streaming sessions, I'll post those links in our WhatsApp group. Feel free to join and see how it is. Again, purely an educational session, not for trading, copy pasting my trades and all, because there will be a lot of delays expected in the live stream. It's just purely an educational video. If any one of you are interested on live streaming, live trading, intraday trading of future contracts, right? So daily 1 hour, I'm planning 1 hour, 30 minutes to 1 hour. Let's see how it goes. Okay. Okay, guys. Thank you all, and have a good day and happy trading.